Um, Again, I'm Derek Douglas with the University of Chicago, and it's really a delight and a pleasure to be with you all this morning. Really excited that this conference came to Chicago. It's so important, both the book, but also coming to the cities, coming to the regions, to get the message out and to engage on these issues in the context of the region. And so I just want to commend all those who organized the conference, those who developed the book. It's a lot of work that went into it, but I can tell you from my vantage point, it's already taking hold in the communities. The title of our panel is Today's Policy and Financial Landscape Nationally and in Chicago, What Are We Facing? And so what we're going to try to do this morning in 1 hour is really set the stage, both nationally and in the context of Chicago, to think about new ways in which this whole notion of what works comes into play, thinking about the new context for community and economic development, and also some of the new dimensions of community and economic development that maybe have not been at the forefront in years past. And to really grapple with these issues and to set the stage, it's important to first understand what some of the critical changes are in the demographics and the political and economic environment, the dynamics between people and communities that take place today, as well as the political and the economic landscape. And we couldn't have really a better set of people to do that with on our panel. I won't go into their detailed bios because you have them, but I will introduce them briefly. To my immediate right, you have Terry Mazzini, who's the president and CEO of the Chicago Community Trust, and I will just say anecdotally, one of the key leaders in the city and the region of Chicago around these issues. Next to Terry, we have Alan Berube, who's a senior fellow at the Brookings Institution's Metropolitan Policy Program. He is also the author of one of the chapters in the book entitled The Continuing Evolution of American Poverty and Its Implications for Community Development. Next to Alan, we have Jennifer Tescher, who's the CEO of the Center for Financial Services Innovation. She also is the author of one of the chapters in the book, Household and Community Financial Stability, Essential and Interconnected. So I want to start with Alan. I'm going to ask, this format we're going to use is I'm going to do a few questions, opening questions to the panelists, and we'll have a little bit of a moderated discussion. But we want to save a good amount of time for open Q&A with the audience. But I do want to start with Alan to kind of set a national landscape. In your chapter, you really make the case how poverty today is very different than what poverty was, say, in the 1960s. And I was wondering if you could tell us a little bit about what some of those key changes are, how we should be thinking about those changes in the context of how we approach community and economic development today, how it impacts the efforts to alleviate poverty, and so on.
Sure. Great. Thank you, Derek, and thanks for having me here today in Chicago. It was such a pleasure to be involved in this effort and a real opportunity, not just to get my word out there, but to learn from a lot of other people and engage folks around the country in a lot of issues that I care about and my program at Brookings cares about too. Last night I saw author of another chapter of the book, Angela Blanchard from Neighborhood Centers, and she revealed to me that in my interactions with her staff has come to call me Eeyore. Because I always come into these sessions and talking to her, and I say, oh, there's so much poverty in America, and what are we going to do? So I'm going to try to be a little bit more constructive and positive this morning and not get things off on too bad a foot. But my chapter in the book and what I work on at Brookings does look at, as Derek hinted at, the sort of the changing demographics and labor market characteristics and place of poverty in America today. And I think what I was trying to put forward in the chapter is that there are a lot of significant challenges that have risen to traditional models of community development that are reflected in the changes in poverty over the past, say, 40 to 50 years. So I'll just tick off 3 to 4 of those very, very quickly. First is just the magnitude. There are more poor people in America today than there were at the dawn of the war on poverty and the Great Society. In 1973, there were 23 million people living under the poverty line in America. Today, it's twice that. It's 46 million people under the poverty line. It's about 11% of the population in 1973. In the wake of the Great Recession today, it's about 15% of the U.S. population. Demographically, quite different. Community development and the war on poverty came up at a time when the nation was demographically very different than it is today. And in particular, community development, as a lot of us understand it, arose in the wake of urban renewal, riots in cities in the 1960s. So more focused on A, sort of inner city African American communities, and B, rural white communities, Appalachia, that sort of thing, if you think about where President Johnson went in his 1960s travels. Latinos were 10% of the U.S. poor population in 1973. They're 30% of the U.S. poor population in 2010 in the wake of, again, very dramatic changes in the demography of the country generally, but also in the demography of the poor population. A third thing is work. And what's the relationship between work and poverty? 43% of the nation's poor population in 1973 was working age. With the reduction in the poverty, particularly of the senior and elderly population that came about through Social Security and Medicare, combined with the aging of the baby boomer population, today there are a lot more of the poor who are of working age, 57% in 2010. However, in the wake of a lot of, I think, rather depressing changes in the labor market over the last 10 to 20 years, the share of the poor who are in work, share of adults who are poor in work, was about 40% through the 1980s and most of the 1990s. But after the recession at the beginning of the 2000s, very stagnant job growth throughout the decade, and then the Great Recession, of course, that's down to only a third of poor adults who are actually in work today. So more labor market disconnection going on. And then finally, the relationship between place and poverty, which is the focus of a lot of work that we're doing at Brookings right now. In 1970, the urban and the rural poor were sort of basically split evenly, about half in urban areas, half in rural areas. Today, in 2010, 80% of poor people in America live in metropolitan areas. So it's a much more urban population than it used to be, and it's a much more suburban population. So they're in major metropolitan areas, but there are more poor people in the suburbs of those major metropolitan areas today than there are in cities. I have a new book out. They put it last, just a little plug. You can get it on Amazon.com. It's called Confronting Suburban Poverty in America. And I think, it's of a piece with what my chapter is about in this book, too. But I think that book, this chapter, and I think the discussion today is going to reflect what I think are three challenges that sort of grow out of these changes in the demography and the location of poverty. One is that the challenges are bigger, the magnitude of the problem is larger, but the resources aren't. Secondly, I think the most sort of seasoned and high-functioning programs that we have provide a set of solutions, particularly around, say, affordable housing, that don't necessarily mirror what I think are the largest issues in poverty today, which are really around the labor market and how well low-income people are plugged into that labor market. And then thirdly, the most experienced organizations that are delivering on the solutions aren't necessarily where the problems are growing fastest, which is in suburbia and in regions of the country that didn't sort of grow up with community development, the South and the Southwest in particular. So that's where we are, but I think we're going to talk now about the solutions and sort of what's coming out of this region too, which is quite exciting.
Okay, terrific. So there's a lot in there that's going to be, I think, leading to a really rich discussion with the audience later and among the panelists. Jennifer, let's bring you in now, because your chapter really emphasizes the importance of quality financial services to vibrant communities, which hasn't historically always been one of the leading issues talked about when people are thinking about community development, particularly beyond mortgage financing. Can you discuss your perspective on why this issue is so important and how you think it needs to be incorporated in the community development approaches?
Sure. Good morning, everybody, and thanks so much for having me here. I am absolutely the poster child on this panel for what I think the book is trying to communicate, which is sort of a broadening of community development. CFSI is in the business of improving the financial services experience for underserved consumers. But over the last year in particular, really in the wake of writing this chapter, I've been thinking a lot about the concept of health I think if there's one thing that ties all of us together in this room, and this is a very disparate audience, is that we're all in one way, shape, or form in the health business, whether we're focused on the health of a particular neighborhood or community, whether we're focused on the physical health of residents, whether we're focused on the environmental health of the region, or in my case, or in some of your cases, we're focused on the financial health of residents. And I think all of those things really need to work in concert if we're going to ultimately have healthy communities and healthy consumers living in them. In the chapter I wrote, though, I really described financial services as being plumbing, as being critical infrastructure for all of the other things we're trying to do in communities. And in this country, and in Chicago really mirrors the nation in this way, about 1 in 4 households either are disconnected entirely from the financial mainstream, or they're connected, but in a way that's not really meeting their needs entirely. Let me give a couple of examples of why I think this plumbing is so important to all of the other things we're trying to do. So last year, I don't know if you've heard about this, but in Kansas City, another Midwestern city, Google decided that they were going to lay fiber in order to not just give everyone in the city access to broadband, but broadband that was 100 times faster than anything like the rest of us are used to using. And immediately, one of the big concerns and challenges was, let's make sure everyone gets connected, right? Not just sort of the wealthy communities. Let's make sure that the lower income communities get connected. There was a big push. Google made a big push to make sure they were getting out into the communities. Community organizations did all kinds of rallying around. And at the 11th hour, as they're trying in this one neighborhood that really was underrepresented, an African-American community, to get people registered by the deadline, all they had to do was sign up and give $10. So money wasn't an issue. There were subsidies available. The issue was that Google could only accept payment of that $10 with a debit or a credit card. So what might seem like a small plumbing issue becomes a pretty significant problem. Let me give another example that's happening right now. The Accountable Care Act, right? We're just months away from it taking effect. A new study out shows that about 8.5 million Americans who would qualify for the subsidy may not be able to participate because a lot of the insurance companies are saying we are only going to accept premium payments through an automatic transfer from your bank account. We're not going to accept credit, debit, prepaid cards because there's a cost to us. There's an interchange fee, and we're trying to wring as much cost out in order to make this the economics work. So now all of a sudden, folks are scrambling around, including HHS, to figure out what do we do to make sure that folks don't get left behind because of a plumbing issue. I could go on. There are many issues like this. But I think what the two examples I just gave, what they have in common, that they're really about the shift of money from something physical to something digital. And I don't have to tell all of you about the tremendous changes we're seeing in technology. Almost nowhere are we seeing that have a greater impact than in the world of money in finance. And in the examples I gave, while digital money can feel exclusive, it could also be incredibly inclusive. It can reduce the cost for providers to serve, meaning they can serve way more people. And it can provide a far richer experience, certainly a more convenient experience, in some cases a less costly experience, but most importantly, I think from a community development perspective, a richer experience. So not just enabling someone to get on the on-ramp, but actually be on the financial superhighway, increase the opportunities for saving, for engagement with your money, understanding where your money is coming from and where it's going, enabling consumers to make real behavior changes that are going to improve their financial health over the course of time. As we think about the shift to digital currency and the shift to technology as a whole, it's really increasing competition in financial services from significantly unlikely sources. And this is where the rub comes, right? Because as we think about communities We think about what we used to know, which were bank branch, and the bank branch being a symbol of strength in a community, and this is a safe place to invest. Well, in the digital world or the virtual world, the notion of physicality is really changing, not just in money, but in terms of how we transact business. Is there going to be a bank branch on the corner? And there's a bunch of new providers, new entrants who are unfamiliar to us and may cause us concern. Do they really have the best interests of consumers at heart? And I think that this raises the bar for us. We need to, on the one hand, hold these new providers accountable, making sure that they're really offering high-quality, rich experiences. But we also really need to be open to these new models and new providers, because I think they're going to represent the future. First of all, we want to make sure that the consumers we care about most aren't left behind. But I also think that they have the opportunity to offer something even better than may have been there before. So I think that this virtual versus local, how do you bridge that? How do you make those things work together? I think that's going to be a critical component facing community development going forward.
Terrific. And we actually are working on a similar broadband project on the South Side, so I got to follow up with you afterwards to make sure we don't have that same stumble Google had. Terry, let's get the Chicago issues on the table. Chicago has always been a city of neighborhoods, and there's an interesting dynamic going on right now in the city where when you pick up the papers, you see new incubators, new companies coming to downtown. Technology sector seems to be booming, and there seems to be a level of vibrancy. But then when you read through, you see a lot of challenges in our neighborhoods around safety and violence, around schools and closures. And it leads some to think that there's two kind of opposite dynamics going on, two cities within a city, if you will. What are your thoughts about the city and the region as a whole and how we can move together in a forward manner? I know you have some slides I think you want to use to present. So,
yeah, thank you, Derek. Having home court advantage here, I'm going to tell the Chicago story with some slides representing the Community Foundation, and there are 700 community foundations across the country. I know my colleague Nicole Taylor from the East Bay Community Foundation is on the San Francisco Fed board. We have Grant Oliphant from Pittsburgh over there as well. So it's a very important relationship here. Our mission is community, and to tell the whole story of our community for that. And for those of you from Chicago or aware of Chicago, we really have become a tale of two cities. And this is going to be, for the foreseeable future, a decade or so, as this particular generation's transformation of the urban reality of Chicago plays itself out. There's a tremendous concentration of wealth and affluence in this particular part, the core of the city, and then there's devastating poverty outside of that before you get to a more affluent ring of suburbs. To paint the picture here, a number of drivers. Alan talked about the changing demographics for that. We feel it here in Chicago that as a result of the recession, immigration into the metro area has slowed and in fact even declined, perhaps for the first time in Chicago's history. A city that is built on successive waves of immigration. We don't feel this. We've lost 200,000 people in the last census, for instance. Prior to that, we were bolstered by an influx of immigration. To make Alan's point, the growth of poverty in the suburban communities that lack the human service infrastructure, that is very taxing on a community foundation to try to build that capacity for that. And as a result of the recession, we see declines in household income and the replacement of jobs. Gone are the middle and high wage jobs, being replaced by low-wage service jobs, serving this affluent core in our city. This, I think, is the centerpiece for a lot of our comments here. Here you can see Richard Florida's work on the creative class and the working class, you can see that Chicago has been replaced. It's a sea of red, and those map onto our poverty communities. And same in the larger metropolitan region. They're either high-wage jobs or low-wage jobs, and not much in between. Maps on to where industry remains in our city. Here you can see the change in population. The city center grew by 50,000 people. So if the whole city lost 200,000, that means everywhere else lost 250,000 people. For that, unemployment maps onto this, very low unemployment up the shore, and concentration of income. You can see how tightly concentrated that income is in the dark blue area for that. And then the growing expanse of poverty to the west and south of our community. Here's probably the most telling part of my remarks. The city itself creates a hardship index, and I also want to acknowledge Dory and Woodstock Institution. One of the themes in the book about what works is the need for data, and we are blessed with a number of organizations like Woodstock that are very good providing analytical data for decision making. But with the hardship index, if we rank, and that's issues of population, education attainment rate, unemployment, income, 13 years ago it was 50-50, declining neighborhoods and prospering neighborhoods. 2010 census, you can see this distinct compression and collapse to a small number of neighborhoods that are thriving in Chicago, whereas the vast majority of Chicago neighborhoods are experiencing stress. And as Derek said, Chicago is a city of neighborhoods, and this is a very serious condition for us as a community foundation to look at. So when we look at the mapping here, it's a very large portion of the city, and this is what it looks like. I've lived in Detroit, and had you told me, I would have said these photos were from Detroit, but they are just east of the University of Chicago. So I blame Derek directly for the state of these neighborhoods.
I just got here.
But you can say it's the class, that massive disinvestment, leveling of properties, single homes anchoring an entire block for that. So, we look then at the keys of education, neighborhood revitalization, economic development. The city has a start with their opportunity areas that they've identified, 7 areas strategically located around there. But that gives you, I think, a visual for the challenges that we face here in Chicago.
Thank you, Terry. Very stark statistics about what we're dealing with in this city and region. So what I want to do now is to put some questions that maybe we can have a discussion or multiple people can respond to. And picking up on your last presentation, Terry, I want to start with one with you. And it is this notion of community development, which has tended to focus on neighborhoods. I know that since I've come to Chicago, we work a lot with communities on the south side, and the emphasis has been you work with one community on their neighborhood, they have a strategy to redevelop it, then you go to a neighborhood right next door, they're working on their own strategy. And I think that one of the questions posed by the book that I want to pose to you in the panel is this neighborhood focus still the right focus for community development in this day and age? Or should we be thinking about what's needed to better integrate neighborhoods into the broader economy, the regional economy? You could flip it. You could say, as people are thinking about the regional economy, can we create greater emphasis for them to also think about how those things connect to neighborhoods? And I know here in Chicago, the mayor put out a plan through World Business Chicago, a plan for economic growth and jobs, one of which is a strategy to connect the neighborhoods to the regional economy. So what is your take? Do we need to move out of the neighborhood-centered focus around community development into something different? And if so, what's the best way to do that? I'll start with you, Terry.
Okay. To me, it's the interplay of both perspectives. As a city, I showed you the map with the opportunity areas. Chicago would benefit from having a comprehensive plan for the entirety of its landmass here, and to understand that areas like where I showed the photographs of probably need to be completely repurposed for their role in the city. And it's, the extreme example is what Detroit has been doing. But Chicago has zones like that as well. But the neighborhoods, the key to people wanting to live, work, and play in a neighborhood is that they do feel a sense of ownership and identity. In the work that LISC has been doing here with the New Communities program funded by the MacArthur Foundation shows the power of these quality of life plans that communities have, that they are able to take an asset-based model and identify what they can build on. And then I think what you're doing with World Business Chicago and the neighborhood strategy to connect financial resources and workforce opportunities to residents and neighborhoods, to establish stable housing, establish increased income and education opportunities for those neighborhoods that have enough of an asset base to remain viable, but to recognize that some neighborhoods in Chicago, I think, have been so devastated by the financial crisis that we need different remedies in those cases.
Alan or Jennifer, want to jump in on this?
Yeah, I'll go first and just say I do think that what the city is doing and Mayor Emanuel's plan with Rural Business Chicago is a very good example of sort of thinking about, it's actually about poverty alleviation if you think about it in the right way, right? Because the research shows very conclusively that the thing that matters most for raising the income of the lowest fifth or quarter of the population is employment and the level of employment. And depending upon where you are in the country right now, that might be 4% unemployment if you're in Omaha, and it might be 20% unemployment if you're in Stockton, California. So it's the focus on employment and the focus on the region and increasing the availability, not just of any kind of employment. I mean, cities and regions have chased a lot of crappy jobs over the history of economic development, but focusing on your real sectoral strengths, what your city and region does that makes it distinctive in the national economy and the global economy, and then finding the occupational opportunities within those sectors that are accessible to people who may not have a college degree, but with the right kind of secondary and post-secondary credentials can gain access to jobs that pay decent wages, provide decent career advancement opportunities. I think that's what this plan is about, the reorientation of the community colleges here in the city. I think it's not the only way to think about poverty alleviation, but it's essential. And I think all the other stuff is just window dressing if you're not focused on what's the employment plan for low-income people in the city and in the region. And in the end, it gets back to what David and others talk about in the book, is connecting neighborhoods up. It takes these quarterbacks who can think about the city and the region as a whole, who can do more than one thing in more than one place at the same time. And I think what Terry's organization does in funding folks like the Metropolitan Planning Council, IFF, and others here, again, I think it's a very leading edge practice when you look around the country in terms of thinking about the economy and thinking about the region as a whole when it comes to poverty.
Yeah.
I would just add that we live in a time of interconnectedness, right? That we're really talking about networks. And so while there's a lot of history, particularly in a city like Chicago, of neighborhoods, we've got to find ways to connect up neighborhoods, not just from a top-down city hall strategy,
right,
but also from a quality of life, right? Not every neighborhood is going to get a Walmart or a Starbucks or whatever the sort of retailer du jour is. Those are only going to go in a few places, but they could benefit large swaths of the city, perhaps. So I think that figuring out how to link up groups of neighborhoods or the city as a whole to national markets is going to be important, because increasingly we're seeing either very small businesses or national markets, and finding how to connect those two in a coherent way, I think, is going to be important.
Let me throw out another challenge to a lot of the traditional way in which we've been approaching these issues, and that's around housing. for the last 30 years or so, housing has really been kind of the centerpiece. Both affordable housing and home ownership has been really the centerpiece, or at the center, around communities and community development. And I want to get your perspectives on whether or not that is still the right way to think about it, or if we should also be changing or broadening that focus as well. Do you want to start, Jennifer? We'll come back down this way.
Well, I'm going to be probably the contrarian on this panel, I think, on this topic. You know, Chicago is a real estate kind of town, right? When you talk about community development in Chicago, real estate is absolutely at the top of the list, whether it's multifamily housing, single-family housing, commercial redevelopment, and you know, given what I do every day, I have long thought there had to be more than that. And I think the results of the financial crisis and the Great Recession demonstrate that there has to be more than that, that community development has to be built on a foundation of more than just real estate or housing. You know, the work that we do at CFSI was really born out of the idea that, wow, in the go-go days when banks and other financial services companies were looking for more customers, right? Not everyone was mortgage ready. Unfortunately, we saw the results of what we tried to do when people weren't mortgage ready, and we just decided, well, we think you're ready anyway. And so I think that there's a lot of work to be done to be thinking about what is a stable foundation both for a community and for an individual's balance sheet, and really start the conversation from there as opposed to is it about home ownership or is it not?
You're not as contrarian as you think. I mean, I basically, you know, I think I share this view. I think I understand, and I think, you know, the book and some of the initial chapters reflect, you know, how we came to focus on housing as the tool, maybe to the exclusion of other tools, because it's, you know, you can do it. You can commoditize it. You can securitize it. You can attract private capital, and you can move it off the books through something like the low-income housing tax credit, right? So it's a tax expenditure. So it doesn't look like you're spending a lot of money on it, even if you really are, and you're spending a lot more money on that than a lot of the other things that I'd argue that communities really need. So the challenge now is how do you, if you buy what I and others are saying, that labor market opportunity is the most important thing, so how do you commoditize that? How do you move that off the books eventually so that we're doing what needs to be done, but it doesn't look like you're spending a lot of money and it can sort of survive the political process? I'm not sure, and I think you know, this focus on sort of social impact bonds and new ways to attract private capital to sort of social needs is a reflection of this shifting understanding. I think that there is, though, a lot of mainstream funding in secondary and post-secondary education that could be bent in a direction that responds to the needs of low-income communities and neighborhoods in a much smarter way, connects them up to the regional economy. And on the housing side, and again, I think this region sort of gets this and is demonstrating it, that it's, for me at least, I think it's more about where in the region, looking at those opportunity zones, where are affordable housing opportunities? Where are the communities that, if you gave more low-income households access to them, really would provide a platform for their social and economic mobility, than it is about using affordable housing and affordable housing tools as only a gateway to the regeneration of very distressed communities.
Terry,
a number of points here. I see this as a both-and situation. I am concerned about as private investment moves into housing and as buying up large amounts of housing stock where they may not have community roots and community interest. We do have some private real estate investment firms that are of and for Chicago, and they have a dual mission to not only make a profit for their shareholders, but also to stabilize and revitalize neighborhoods. So I think that's important. We can track the plan for transformations, mixed income strategy, and very pleased that they're now have resumed building in these communities like Oakwood Shores, and so that's a good sign. Very attractive, moderately priced housing stock in neighborhoods. Concerned about, in the Tale of Two Cities, the economic segregation that's resulting in that, because there are neighborhoods in Chicago that are increasing in housing prices again and will be far out of reach for the growing population of low-income service workers who will need affordable housing options in our community for that, as well as persons with disabilities, as we're trying to build inclusive communities. And we do have an opportunity with the state as they are closing down care facilities at the state level and building community living opportunities for persons with disabilities. IFF is playing an important role there. And we should factor in the impact as the demand and pressure for employment leads to and through college. The rise in college debt is having an impact of delaying home ownership for that, and so it is keeping people out of the markets. Basically, universities have figured out how to get at the head of the line of the revenue streams for young college graduates instead of the mortgage broker getting at the head of the line. It's the university that has
another thing Derek's doing wrong in his
yeah,
position, right?
I wasn't going to point it out. Yeah, what can we say?
Derek, I would just, to put a wrapper on this discussion, we can have all the great regional strategies or neighborhood strategies we want, but until we fix the mortgage markets at a national level, even people who could now afford and qualify for these very low-priced homes are not going to be able to get a mortgage, or certainly not easily. And so there's really, again, a sort of a dual problem at work here.
Okay. Let's bring in the audience now. Great discussion, a lot of issues put on the table. So what I'd like to do is, if you have a question, raise your hand and just briefly give your name and who you're with, and then direct it to anybody or a person in particular.
I got one.
Okay, great. They have a mic back there, so they'll get it to the right person.
Good morning. I'm Dory Rand from Woodstock Institute. Terry, thanks for the shout out. Alan, in your piece, you talk about how finishing high school, working full time, and waiting to have kids before until marriage are sort of the three big factors that can lower the poverty rate. But at the same time, you show that the number of working poor is increasing. And I'm wondering, does your analysis take into account the fewer numbers of union members and the stagnation of wages? How much of this increase in poverty is due to that wage stagnation versus the other deindustrialization issues? And what are the prospects then for raising wages to decent levels, including benefits like retirement benefits that so many workers don't have access to? Thank you.
That's a great question, Dorian. I think you could point to sort of any number of factors in the evolution of the American economy over the last 40 or 50 years that have disadvantaged, basically the bottom half of the workforce by income or skill, and the decline in unionization and the shift from manufacturing to services is one of those dynamics. Certainly the globalization of the economy, the doubling of the global labor force, and the ability of companies to do things in a lot of different places they didn't used to be able to do is another, and that's paired with the technological changes that have changed the relative demand for low-skilled labor to middle and high-skilled labor. So whatever the percentages are among those different dynamics, I think now we're faced with a question like, well, what do we do about it? Where, again, for me, the biggest aim of public policy ought to be to employ the largest number of people for as many hours as they can work in an effort to at least plug people into the labor market. And I think I think we need to be focused on the jobs that I was saying, that cities and regions do that aren't just about serving the local marketplace, but about serving the national marketplace and the global marketplace, because those tend to be, those export-oriented jobs and sectors tend to be the ones that do provide better wages, provide better career advancement opportunities. The research shows that starting wages and then wage progression is better in those industries for workers who not just those who have the highest levels of skills, but those who have lower and middle levels of skills as well. So getting cities and regions and the nation as a whole focused on what those jobs are, connecting kids and workers to those. Will that alone solve it? I'm not sure, but if I had to place my bet on one thing, it would be employment, and as full employment as we can get to, and hope that if we raise the demand for labor at multiple levels of skill across the economy and provide ways for workers to continuously upgrade those skills so they get access to advancement opportunities, that will do more in and of itself to alleviate poverty. It won't bring everybody into the middle and upper class, but at least arrest what has been a slow decline in the social and economic mobility of the United States over time, where now we have lower rates of mobility than a lot of these European countries that we've always sort of held up as these are very reified societies, but actually we're more reified and more stratified than they are, in fact.
Let's go over to this room, this side of the room.
Hi, Ori Pennick, Field Foundation. I have a question. I must start by saying I was born here, so I tend to be a bit jaded. And you add being a former civil rights attorney, I get really jaded. So I think what I want to get, and Terry hit upon it a little bit, for me, the elephant, or maybe the donkey in the room, is the racial segregation and the class isolation that I grew up with that is still here, and according to the Manhattan Institute, continues to make Chicago the most racially segregated city in the country. Everything you've said sounds great to me. It sounds exciting. But having grown up in Inglewood and seeing the massive disinvestment in that community, you got to help me believe. I just don't see how the policies that you're talking about, when you're talking about a city of neighborhood, racially segregated, class isolated neighborhoods, how does that filter down? And I really would like somebody to tackle this, because it's not going to go away because we want it to, because if it had, God, it'd have been gone. I just think somebody's got to tackle that very daunting issue.
Well, Ari, if he's Eeyore and you're jaded, maybe I'm Dr. Doom and Gloom here. But yeah, I think I've worked with you long enough. What the piece of my slides that is missing out of this is the intentional and massive education and investment in education. And it's that, as we have just experienced a large consolidation of Chicago schools, it's looking at what's left behind, what are the opportunities, but knowing that our state is underfunding its own level of adequate school funding to a tune of $2,000 per student, which could buy a lot of counseling services, integration of socio-emotional learning into our schools, after school and extracurricular activities. It's that gap that I think is the elephant in the room, to build on yours. And until we as a state and we as a city come to grips with that, I think we will continue to perpetuate the isolation.
Let's come over on this side now. Does someone have the mic over here? In the back there, the gentleman in the white shirt.
How you doing? My name is Emmanuel Pratt. I'm with a group called Sweetwater Foundation and Chicago State University. And one of the things we do is we do investment through what other people would call vocational trade, particularly around urban agriculture, aquaponics, and teach folks how to do, learning by doing is probably the best way to reach a lot of these youth that get lost in the mix, particularly in Roseland, Pullman, Inglewood, North Lawndale, so on and so forth. Series of neighborhoods that are continually, what we just talked about, segregated, forgotten about, mass disinvestment. So a lot of people are looking at investment opportunities, and there has been a lot of talk about food, the role of food, particularly in areas that have chunks of 23 acres of land, which also is a tricky, very tricky low-wage labor, ex-offenders, and so on and so forth. I was wondering what your thoughts are about the land that's there, because I've driven some folks from D.C. and some other friends from New York, and they see the area and they're like, we buy up everything, but what will we put here? Secondly, because of the race and class issue and perception that people are not going to get over anytime soon. Secondly, what are your thoughts about the initiative that MacArthur Foundation, because I'm working on a project with them around digital badge-based learning that links the hands-on learning by doing. We're doing something with Chicago Summer of Learning this summer, and I think Arnie Duncan has just signed off on it, Clinton Global Initiative signed off on it, so on and so forth.
So food and then the digital learning.
Do you want to address any of that?
Well, I would say on the food, on the land issue, so we have near the university, you have some neighborhoods that have become very depopulated over the last 30, 40 years. I think in Washington Park, which is just west of the university, the population in its heyday used to be 50 or 60,000. Now I think it's down to somewhere between 10 and 15,000. In Woodlawn, it used to be around 90. I think now it's around 25 to 30,000. One of the strategies that these communities, Washington Park in particular, is looking at is the whole urban agriculture strategy. It's very attractive because of their proximity to the university. So one of the things we're trying to do at the university to strengthen neighborhoods is think about our role as an anchor and how can we direct more of our procurement power, our hiring power, and whatnot to the local communities. So the urban ag strategy that's being discussed at Washington Park would be to build some of these facilities. You have the land to do it. Try to get the university and some of the other anchors on the south side to be a first client, so you could actually have a place to sell your produce to, and then you can grow from there. And we've been talking to them. We have a sustainability officer who's been working very closely with that community on that strategy. The one thing I've suggested, though, and this goes to this whole notion of Chicago being a city of neighborhoods versus thinking across neighborhoods, is that several neighborhoods have the same idea, and they all can't do it. So if you have 5 or 6 neighborhoods, everyone wants to be the urban ag capital. It's not going to work. And so what we've been trying to do is say, let's get some neighborhoods to think collectively, think more as a region, if you will, and then come up with a strategy for how something like that could be deployed. But I do think it is something that merits a good look. In Cleveland, they have this thing called the Evergreen Cooperative Program, which I'm sure many people have heard about. And one of the businesses that they created was a large facility that's producing lettuce, and it's doing very well. My understanding is they're selling it to the 3 big or 4 big anchors in Cleveland, and our folks from Washington Park went with some folks from the university to look at that project. So I do think that the food urban ag is a potential solution for some communities, but we got to think about it a little bit more comprehensively.
I'll respond on the digital badge
go ahead.
issue, actually, because I was at CGI last week also, and there was a lot of talk about it. And I think I'm excited about it for 2 reasons. One is I think the portability of it is very exciting. We need more strategies like this that are portable. But underlying the portability, and the other reason why I'm very excited about it, is it's going to force us to figure out how to measure. Right? We all have to have a common agreement about what the standard is. And that forces a conversation about, how to measure. And I think that's true in a lot of arenas in community development, that a big part of the issue is if we could just agree on what it is, what the end game is, what we're striving for, that alone would help with the quarterback issue you raised earlier, or the multiple sort of competing against ourselves issue. We would be much better off if we all could at least come up with shared definitions. And so that project, I think, is exciting for that reason.
Let's come to you have someone here. They gave the mic there to someone.
Yeah, my name is Bob Doherty. I'm from St. Leonard's Ministries. And I have to say that, Jennifer, when you said you were the spokesperson for broadening community development, you lost me after all of that. I think poverty is such a personal issue, and it's beyond a house. It's in some cases beyond a job. In some cases, it's beyond financial literacy. And I would encourage and hope that the whole community of community developers learns to parse that noun of poverty a little more carefully to see those subgroups within it. I have a very personal interest in this. St. Leonard's Ministries, we work with formerly incarcerated men and women. In the state of Illinois, 80% of the people who get out of prison will come to Northern Illinois. 60% of that number will come to 6 communities, central city zip codes, that are ill-equipped to take care of them. In the past 25 years, the Department of Corrections has added 1,000 people each year to the number of incarcerated. So we now have almost 50,000. So for these individuals, the constellation of issues and problems is so widespread that to talk about real estate or to talk about a bank account really misses the whole target. So I hope that we learn to broaden our focus to get down to these subcategories. Illiteracy, nothing to do with education. I can have a high school diploma and still be illiterate. So that we develop those components that are going to then allow people to move into the world of employment.
I appreciate that feedback, and I couldn't agree more. The piece I want to pick up on in your remarks, though, is about it's not one size fits all, right? Not everyone shares the exact same characteristics. We lump them all together as poor, but there are many different subgroups. I would add on to that to say that that people don't wake up every day saying they're poor. And so, I suspect that one of the reasons why it may sound like we're speaking a different language is I'm really not sitting around thinking about, what can I do for poor people? It's everyone's got sort of strengths and assets to bring to the party, and what can we do to help people leverage what they have and what they know and what they can do to improve their lot in life. But I agree completely with you that for some folks we're talking about such a basic level of need that all the stuff we're talking about up here may feel like it's missing the point.
But just to be affirmative for a second, I mean, I think that's the promise of this book and this effort, is that it's getting people who bring very different perspectives and different populations of interest to a common session and sort of understanding of what we're all doing, and maybe we're at times sort of contradicting one another and have overlapping purposes, very different, priority lists, but at least we're having the conversation. I mean, I don't come to a lot of these places where people are coming from health and housing and transportation and education, and to Jennifer's point, sort of trying to arrive at a common definition of what the hell are we all doing here, right? And how are we gonna know if we're succeeding? So I hope that as the day evolves and as you're meeting people, that that everybody's able to sort of keep that affirmative thought in mind about that this can be the start of a sort of different way of approaching not just community development, but sort of poverty alleviation and community growth and development more generally.
So I think we'll take a couple more questions. We have one this side, then we'll come in the front on this side.
Sharma, and I'm with Sustainable Value Alliance. My question was to all of you, and specifically to Terry. So you mentioned about the poverty rate is highest here, right? And on the other side, we have so many Fortune 500 companies in Chicago area. So how can we engage them in getting involved in poverty alleviation and more actively engaging with the community beyond their regular funding strategies, like give some funds and that's their responsibility? How can we actually actively engage them in working closely with the government and with the not-for-profit organizations? Thank you.
There are a number of things underway. Part of it is recognizing that we have to be entrepreneurial and innovative as part of this transformational moment that we're in. And I think investments in places like 1871 to incubate. There's also a very large and growing urban agriculture, sustainable food community in Chicago, and I know that in our partnership with the Searle family, we are currently studying and in concert with the city's overall plan for urban agriculture to look at this as a pathway to employment and to industry revitalization. for that. There's also a reemergence of the important role that transportation, distribution, and logistics play. And across the board, we have strong corporate leadership, which has vanished from many of the second-tier cities, particularly in the Midwest here. And it's those leaders who not only serve on some of the community-wide planning, but they're executives who serve on dozens of not-for-profit boards, and they bring their expertise, their fundraising acumen, and their strategies and network relationships. That's very important as part of this. I think our responsibility is to help to frame what are the most meaningful opportunities for nonprofit engagement, and how can we more and more demonstrate collaboration, because as a couple of the other panelists have said, we still exist in the nonprofit community in predominant silos where individual organizations are going it alone in a small geographic footprint. And in fact, we have to scale up to embrace the larger challenges.
Let's take one last question over on this side, somewhere in the front.
Albright, Wallen Financial Advisors. I work with small to mid-sized 501c3s, straightening them out financially, and work with low, very low, and mod-income housing organizations, roughly neighborhood-based. And I think the second elephant in the room is lack of availability of credit. These organizations, and great at what you've talked about, but these organizations who try to assess and address the needs that you're discussing cannot get credit, even if they have somewhat decent debt to asset ratios on their, if they have brick and mortar, or if they have various programs to fund, which the program efficiency ratio is pretty much there. They're shut out. I think that this is a key thing that needs to be addressed before any of the initiatives can take place. And it's just a thought, how do you open up the flow of capital necessary to achieve what you want to achieve? Thank you.
Yeah, I would posit that this situation is exacerbated by the state of Illinois using nonprofits to balance its budget. And so I think that it's the accounts payable from the state that have piled up on nonprofit balance sheets that could be a factor in why credit is hard to access because of that uncertainty of the funding stream. So some of that elephant is the state finances.
I was told we have time for one more question. I want to come to this lady right here who's had her hand taller than anybody else in the room since the beginning. Wait for the mic so people can hear your question.
Oh, thank you. I'm Gilda Perella from Loyola University, and my question really has to do with the nature of work, because I think it's going to be changing. It's already changing. The jobs that are gone are not coming back. We need to have a short and long-term plan, and I wonder if this panel has given any thought to what the nature of work looks like in the future and whether there is going to be any, or if there isn't, what are our plans for that eventuality. The second issue is, I think, infrastructure seems to be a huge need, which would keep enormous numbers of people employed for a considerable amount of time if there were a partnership between private corporations and public financing. I think this would go a long way to the short-term addressing of these needs. Thank you.
You want to start, Alan, with this nature of work question and what the future looks like?
Yeah, sure. I wake up at night thinking about this kind of stuff sometimes, and it goes back to Dory's question from earlier about, what does work look like in the 21st century, and is there work for the 66% of people who are, presently under the poverty line and not really connected to the labor market in a meaningful way. There are lots of reasons to be pessimistic about it, and the role of technology, replacing the demand for labor, or at least constantly sort of raising the bar in terms of how much education you need to connect to a decent paying job. My more positive view is based on a paper we actually just put out last week at Brookings about what is STEM, and we all love to talk about STEM, and if you believe the National Science Foundation, it's about 4% of American employment, and if you've got a master's degree or PhD and you wear a white lab coat, you get a great job, and you can be competitive in the global marketplace for labor. At the same time, there is another, say, 15% of jobs in the United States today that, because of the way that the labor market and jobs have evolved, do require more of a focus on technology, more of a focus on math and science. But a lot of those jobs are accessible to people who have less than a four-year degree, and they're in what we call the sort of hidden STEM economy. They're the folks who make the buildings and the machines run, and they're in manufacturing, and you need more education to do that now than you used to, but not necessarily a master's degree. And I think we've talked about STEM and technology and those skills in a way that has excluded a large segment of the population, a lot of sectors of our economy that make the economy go, and that could be a real opportunity for kids who are not on a straight and narrow pathway from high school to enrollment in a four-year university to going on to get a graduate degree. So I think as you sort of think about the changing nature of work, it is inevitable that more and more jobs will require more specialized skills and more of a focus on technology. But if you think about what the city colleges are doing right now here, I think there's a lot of promise in connecting kids who have been sort of shut out of that STEM conversation to a world of work and opportunity and access to good paying jobs and sectors, that if we just thought a little bit more broadly about what STEM is, we could do a lot more for those populations in those parts of our economy.
And I would just add that what we're doing here in Chicago is the answer to the question of what the jobs of the future are will depend on each region. And what really the strategy needs to be like what they're trying to do here. Think about where are we strong, where are the growth potential for the city or for the region, and then let's align that with our workforce development strategy. Before, those were not necessarily connected, but by connecting those up, thinking about those strategies and connecting from the top and connecting from the communities, then you can be a little bit, I think, more strategic and have better progress on your question. On the infrastructure, does anyone want to respond to the... What I'll just say, I'll just say on infrastructure, it's a very good question. There are a lot of jobs to be had there. It's been one of those issues that it's actually been stymied a little bit at the national level. There was an effort to get a big bill through. They couldn't get it quite done. I think they did a smaller scale thing. And I suspect that they will do some sort of, just the infrastructure is crumbling and there's a need for it. I think there will be eventually some larger scale infrastructure bill. It's multimodal, it thinks about infrastructure in new ways that will create an opportunity to connect to the workforce and employment in a powerful way. We're out of time. I want to thank our panelists for really, really tremendous remarks, and thank all of you for the great questions.